All right, folks, happy Thursday. Crypto market updates, March the 14th. Had to check the calendar. So, looking at Bitcoin, looks like my prediction of it being sideways. 3,900. Just going to keep saying that until it does something. We definitely had some altcoins that popped off a little bit this week. In relation to this, it's making slightly higher lows into resistance, but hasn't really broken out of resistance yet. So it's still pretty much sideways. To me, it does, because of these two equal highs there, especially if it could retest or if it breaks out, that does kind of look like accumulation, but you never know, right? I mean, one whale can shake up the entire markets and decide to dump on the order book. So you always have those random variables. So
this is definitely, in my opinion, a spot where it's like, we could like guess, right? But it's a coin flip. So I was talking about this in chat the other day that, for me, this is like a reactionary area, right? Where we would react, not try to guess. Because you could use TA to come up with a bear case or a bull case, and you could take one side or the other, and it's a coin flip if you're going to be right.
Yeah, for sure.
So instead of trying to use my crystal ball to predict the future of what everybody's going to do, I'm just going to react when one of those plans plays out. So literally had no change in my plan or predictions or probabilities, possibilities in the past couple of weeks.
Yeah, absolutely. And there's two different lenses that one can look at this from. Like from the lens of a trader, there's not really much action here unless one is, doing algorithmic trading on smaller movements or, leverage junkie on BitMEX, scalping type of thing. But as far as like position swing trading, there's not a whole lot here. So the reactionary approach is probably a safer bet. From the eyes of a longer term investor / accumulator, Bitcoin being like 80+% drop off the top and altcoins and stuff, certainly not a terrible place for someone to scoop some up, even if it got lower. If you don't go all in on the first buy and you have some ammo, then it should be all right. As far as like if someone was completely new to crypto, like this is definitely like a point in the market where I'm a little bit more active behind the scenes as far as anyone in my own life who's interested in it, where I feel a lot better talking to them about crypto and helping them versus like what we had up here, right? Just because of the, we don't know where the exact bottom's going to be, but we do know that if someone were new and they were to just buy Bitcoin here, they would be doing a hell of a lot better than pretty much anybody in 2018 who joined and the latter end of 2017. So, with calculated position sizing and just knowing that there's downside risk, I don't think it's a terrible place on the charts to invest. Generally, like investors as a whole, don't necessarily always just buy the exact bottom. So it's really about position sizing and just getting a good average fill on spot. Obviously, if you're playing the leverage game margin, that's not really a long-term investment. It's more of a trade. As far as altcoins are concerned, so that's Bitcoin. The stability in Bitcoin has led to certainly some pops in altcoins, right? It's like that popcorn effect that I talk about, where you'll have this prolonged, year of sideways grind, and then you just get these random coins breaking out of the range. We did see a lot more of that this week, and each week it seems like there's a new coin or new project that kind of pops out. Which one was it this week? There's all this kerfuffle over a few coins this week. There was Engine Coin. Okay, so here's an example of what I'm talking about. And the interesting thing with something like Engine Coin, for example, it's like a gaming token, right? It's a coin specifically for gaming. That's kind of those types of tokens are interesting because they're not securities, because the SEC has already come out and used gaming tokens specifically as an example of what's not a security in crypto. We know that games can be very popular and profitable. Something like Fortnite, for example, made over $1 billion in revenue. We know that there's utility in gaming, not the fact that the gaming doesn't have any real life utility, but tokens inside games have utility, and value is just based on the perception of the participants and what they enjoy and what they perceive as value, almost like an art collection, or if there's a popular game, suddenly becomes a lucrative business, so on and so forth. So tokenized gaming kind of takes gaming to the next level. Oftentimes, you're just buying in-house tokens that you can't actually trade. There's no speculative element on the exchange. So this is kind of taking gaming to the next level. So this is what I'm referring to as far as like the popcorn effect, right? So you have this project. It was new, went on a tear, had like a very quick, small little accumulation when it was an early price discovery, long bleed with everything else. It's the BTC charts. Then you can kind of see it had there's a bit of this accumulation pattern here where we had some support in through here on this descending triangle, kind of broke down similar to Bitcoin on the descending triangle, established supports at prior resistance, which is very, very clean when you think about it. Just kind of retested resistance several times. And then all of a sudden you see this pop, and it was a pop on news. Basically, this was an addition. There was a catalyst to this. It was an addition to Samsung. Samsung's phone's like, hey, we're going to add this token. Suddenly people FOMO'd, and suddenly it breaks out of the accumulation range. And, you've got the first pop, which is fairly drastic. And then it kind of produced you could say like I guess you could call it a bull pennant type formation. Then it had a secondary pop. Now, I sure as hell wouldn't be buying any up here in the clouds, because this project already went up 500% on the BTC chart over the course of, a few weeks. Let's just draw an extension here. But this is an example of like the popcorn effect I'm talking about as far as alt season. Like everything doesn't just pop off right at once. When I see coins like this, one at a time, breaking out of these sideways ranges, to me, that's often a signal that there's more to come with altcoins. If Bitcoin continues sideways over the next little while, or if it breaks out of its range and trends upwards, I think we're going to see a lot more of this. The only thing that can be a damper on this is if Bitcoin has another dump and breaks support to another level, then we'll probably see some knee-jerk panic and some more washouts and alts. But the volume on this coin is some serious volume. This isn't like Mickey Mouse volume. It simmered down a bit. It was at 100 million, simmered down to 20 million. All right.
Yeah, I just saw that. Just hit scroll down. Yeah, okay, disabled. I was like, really, guys?
So anyway, so this is an example. So altcoin season, altcoins, they're a sleeping giant. They look dead until they're not. And when they're not, they're really not. And the interesting thing, when they chop around and they bleed and they're boring and whatever, sentiment can be down, and then we can kind of forget, we're like, all this shit's dead. And now, whether we get one-off pops just into higher price levels, and then it kind of flops and does another period of prolonged accumulation, or whether or not we have a full trending market where we have markets that make continuous highs and lows and where things go parabolic. It's like I said before, there's like different variants and degrees of altcoin season. I almost kind of consider it like categories of tornadoes or hurricanes. You can have a category 1 to 5. If you've got a category 5 altcoin season, the equivalent of that would be what we saw in 2017. That doesn't happen frequently. Like we didn't have any category 5s in 2016 or 2015 or anything like that. Lower categories. So I would say for now, until Bitcoin breaks all-time highs or whatever, I'd assume that we're going to get lower categories and probably not see 100 or 1,000x returns until Bitcoin until the tides rise with Bitcoin. If I looked at this on a, let's see if the USD chart showing anything. USD chart looks like it did pop a new high. Not very liquid here, but you can kind of see. I mean, there's, you know, with the volume and whatever, if one did happen to have a position in this, there's definitely some good money to make, but it's quick, it's fast, you know, like you can't always catch it. That's why personally myself, sometimes with alts, if I see good alt projects, like I don't mind if I see a project that I like, I don't mind having some positions and stuff, even if I do have temporary drawdowns. Like let's say I were to buy this here and this would have this drawdown over here, and for some it would look like the end of the world, and then, you know, it still would be ridiculous profit when it does take off. And then there's some projects that just don't do that, so obviously you have to choose wisely. It's not the type of thing where we're seeing everything popping off, but we're starting to see a lot more things popping off. So, and each week it seems like there's a round of new coins. Like here, so here's an example of another one, right? You see it pretty much hit accumulation right at this structural, you know, V bottom right here, and it looked kind of dead, sideways, 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 dead, and boom. And this is the one thing that I find is kind of unique to the crypto markets that you don't necessarily see, that I haven't really seen as much in equities or other markets. Like you do see accumulation in other markets, and you'll do see, you know, reversals and stuff. But I've also seen a lot of stuff in equities that just literally can take years before it goes anywhere if it reverses. You know, I've seen stuff that just, you know, like an HMNY, for example, like that shit just kept dying and dying. And just when you thought it was even more dead, it died some more. And, or there's other stuff like Deutsche Bank, you know, if like that was an altcoin or crypto chart, it probably would have moved higher faster. But because it's, you know, slower market and there's real world fundamentals and stuff in play, there's other things that kind of tie and anchor it down, even though market sentiment can be a play. With crypto, oftentimes it's really just comes down to cycles and market sentiment until we actually get real fundamental metrics of supply and demand with real products. Often what I've seen time and time again in crypto is you get these like wild pumps, and then people take profit because, you know, it's kind of stupid not to take profit on something that goes like this in a short period of time. And then you see it, you know, it hits, you see the profit takers coming in. The profit takers could be early whales. It could be project founders that are just dumping on people. There's all those elements. So it could be traders. And then there'll usually be like a period of volatility. And then there's a slow grind. And the worst thing to do is try to knife catch the slow grind. And I've been guilty of this before as well, of trying to knife catch slow grinds. But usually when I see altcoins, like this is almost technical in altcoins, when you see them going flat at support or flat at prior resistance for a really prolonged period of time. You never know when it's going to pop. It can take a long time. It can take a lot of patience. There's no guarantee that like this is like half a year right here, right? There's no guarantee that it won't break down further. But more often than not, what I've noticed is that when you start to, and you don't have to, like, here's the thing, like one doesn't have to just buy it here and then wait forever. One could wait till they start to see the popcorn effect on certain markets, you know, some taking off one after another. And if you see projects that you like that are kind of in this space, then obviously there's like position sizing. Another approach would be, you know, if it pops and makes a lower high and then starts to trend and you got like multiple breakouts and consolidation. So you actually see specific markets that are moving, because one downside risk to buying something that's just like purely flat like this is that, let's say you had 100 coins and 30 of them broke out and went nuts, but you invested in ones that didn't. There's no guarantee that yours are going to break out either. So there's there's different like approaches to handling this. One could be like a shotgun approach where you pick what you consider the best projects and sprinkle it about, position size, realize that if you don't need the capital immediately, that it could take a very long time to make a move. Another is waiting for the breakouts. Sometimes with altcoins, like what we saw with Engine Coin, sometimes the breakouts can be so fast and violent that if you're not there to catch it live, the market could already be up like 200% on one candle. That's just basically
and
lots
Rock,
of FOMO.
to your point about that, you know, like that's why I prefer kind of the second scenario that you drew up there, where, you know, you wait for like the second breakout, like a 1, 2, 3, 4 pattern, because you don't know, like today, for example, it's up big, it's up on, you know, obviously like really big volume, but like you don't know if that's going to be a pop and flop, right?
Yeah.
Like Ripple in the early days did that a lot. It was like every like 2 or 3 weeks, like it would pop, but it couldn't catch legs. It would just like spike, it would trap buyers and then continue fading into new lows. But the thing about if you're patient and you wait, like sure, you're going to miss some that just like go crazy and don't have a pullback. I would rather sit back and just watch those, because those are super risky. Like I'm not going to buy something if it's been in accumulation and it's up, you know, 50 or 100 or more percentage points in a day. I'm not going to just buy that. What I want to wait for is some kind of pullback and a retest and a 1, 2, 3, 4 pattern, so we can set risk and really like make sure the probabilities are higher that you're going to get continuation. So by waiting, again, you get better risk to reward because you can actually set what your risk should be, and the probabilities are higher because you have that continuation pattern.
Yeah, absolutely. And here's an example of the downside of what I would call false accumulation signals, right? So you can see that there is like ranges established in through here. And I even had it marked up on previous charts. So, you know, you have like a break of let's say a sell-off. So let's say this is like the slow grind, and it's just kind of grinding out, small little breakout, and you start to see it going sideways in a range, and you could think to yourself, okay, this is an accumulation. I start accumulating, buying it, and then next thing you know, it breaks down. And I've been trapped in these before as well, because I do like sometimes buying stuff when they are flat, and I have made a lot of money before doing that, good risk to reward. But the downside is this, right? So if you buy something like this and then it breaks down, and if the market's not super liquid, you know, you could put set a stop. But sometimes if it's not liquid, you might just have to be patient, wait for it to pop, and then you see it breaks down. It's like a 54% drop from support, which, you know, you really got position size, because if you had a significant chunk of your portfolio in there and it takes a 54% beating, that's not really good. Now, right, and then you have this another prolonged period of what appears to be accumulation. So this would be like, in my opinion, false accumulation. Now, the main difference right now with QTUM that I see versus here is that we did have a bit of a pop out of the range. Now, we have seen a lot of pop and flops before, and there was some volume on this, whereas like we did not really pop out of the range here. So sometimes if you try to line up to be the early bird and try to like knife catch the bottom, sometimes it really works out and you feel like a superstar and you're like hitting home runs left and right, and that particularly works well when Bitcoin's bullish. But you can get away with that a lot more when Bitcoin's in a bull trend. But in a bear trend, prolonged bear trend, there certainly is some downside risk of drawdowns that one has to be mindful of. So the important thing is just to, and this kind of like this popped out and then it came all the way back into resistance. So for something like this, what I would look for is to see if it had a secondary breakout, like what Chris is saying. If, you know, this would almost be like a warning shot. Hey, pay attention. Some volume popped, something good could come out of this. And then if it makes another move up above this and can stay above resistance, then perhaps we'll start to see momentum, right? Because oftentimes the reason why you get pop and flops is I call it like happy whale syndrome. You know, somebody with some coins to burn gets a little bit excited and impatient, does a market buy, creates a spike candle, and then because there's very thin, no liquidity on the buy side of the order books, it does a full retrace, or other people sell into that. And you got to see if, like, are there other participants that are going to jump in and cash onto this, right? So it's kind of like what's happening behind the scenes when you see this. It's usually just like one market order. Like if I were to go down into a smaller time frame, you know, this one candle here, it's probably just, you know, a happy whale. You know, can see it on the smaller time frames, right? Just market ordering, and then maybe some other people. A lot of times these will do like a full retrace. So this isn't, looking at this even on the smaller time frame, this isn't really something I would just dive into and buy. But if it consolidated and then start to make another move up, then that'd be good. And another thing too, if you're more active in trading, one thing I would often do when I was kind of, you know, grinding it, crypto hustling all the time, you know, 15 hours a day with on my computer, is I would see something like that engine news on Samsung, and I'd be on it like within minutes type of thing, and, you know, probably buy it like somewhere here before it makes its full move. You know, as it's starting to break, I would usually market order and then immediately sell and probably like get like a good scalp in or something like that, right? And so, you know, and I've done that on a whole bunch of coins various times. So that's for people who are, you know, either just cutting their teeth and wanting to get into crypto more full time, or you know, people who are currently full time trading, and you know, you don't have a day job or things to do, or you're not like semi-retired trader type of thing. Then that's certainly something to do. You really, like, one of the things with crypto is like it's really revolved around market sentiment and hyped news events. Oh, coin listing or this or that, blah, blah, blah. So like if you can catch those early, it will also require spending a lot of time on social media and having alerts set on various different coins, and, you know, keeping on top of the news all the time. And usually it requires like obsessing and sitting in front of your computer, you know, at least 10 hours a day to be able to catch those fast enough. There's certainly money that can be made there. And, you know, that's definitely one strategy and approach. Or if you knew that there was some kind of like a fundamental event coming up, oh, this project's having a release, or they have a partnership down the line and like no one's paying attention to it, then you can like start to buy something in accumulation. It's all public information, but the thing is like not everyone's paying attention, right? And so this is kind of like one of the edge that you can develop as a crypto trader, and that if you're just a couple steps ahead of the herd and you're on top of that stuff and you see that stuff down the horizon and other people aren't paying attention, it's totally legit and legal because it's all public. So it's not like you're insider trading, but it has almost like a similar effect to it, and that you're on top of the news and can buy into it before all the last minute FOMO chasers start buying tops and when the markets go really nuts, right? Or like, you know, stuff like that. So different strategies and approaches.
Yeah, and Rock, that's a really good explanation. So I've to kind of summarize that, I think you've got two options, right? You can either be somebody who's in front of your computer and trying to be early to the game and catch those scalps and catch the first move, or if you're, you know, if you're, like you said, if you're not able to sit there and be focused all day, every day, you can do what I do, which is wait for the secondary move. So like what I would look for, Rock, can you kind of zoom in on the daily? Like for example, in this case, what I would look for is I would wait for today's candle to close and see if we can get a close above that prior resistance area, which is like what, like 2.8-ish, probably even a little higher than that prior peak. Yeah, like right there. Like if we could get like a green candle, like a daily, to close above that, then that'll show me confirmation that price is holding up. And then like say we get a pullback over the course of like 2 or 3 days and a retest over the next week, and then we get a breakout of that high, of today's candle high, that would be a 1, 2, 3, 4 pattern. And then what you could do is set your risk below the pullback and then look for extensions for profit targets and prior resistance areas. That's, to me, again, that's just what I found is that is much higher probability. And yeah, so like my first target would probably be like 4.25. Yeah, exactly. Right there, somewhere around that area. And then if you run like a risk to reward scenario on that, you know, you're looking on the risk side. Let's see it. And that would depend on like where the pullback was, but it would probably be, yeah, you're looking at like, I would say, and again, you don't know this until the pullback happens, but you're probably looking at like a 50 to 60% reward for maybe like a 15 to 20% risk, something like that. And that's if that pattern played out, right? So that's how I would kind of plan that. Again, you either got to be really, really early and really fast on the trigger, or if you're second to the move and it's a real move that's going to actually move over the course of several days or weeks or months, then there's no rush. You just want to be precise with the entry for the risk to reward, right? So what you can do is, if the pattern's developing, you can have alerts set, or if you really can't focus, you can even have like limit orders set. But that's really how to play. And again, I like to be more aggressive on those types of plays when all tides are rising, right? Right now we're in a bear market, so I'm much more skeptical of breakout plays, and I'm much, trading lower size, trading tighter profit targets, tighter risk, stuff like that. So it really just goes back to how much time do you have? And like Rock said, like, can you be early? Do you have even the desire to be that type of trader, or do you want to be more of a swing type trader?
Yeah, absolutely. Or a passive investor, right?
Mm-hmm.
That's the like cruise control into the sunset approach.
Exactly.
So there's many different ways to slice the cake, or all of them, I've been all of them. I've done all of them. There's many different ways to slice the cake, and it's really up to you and how much you want to hit the gas. It's really up to the individual based on one's lifestyle. Some people have families and a job and stuff, and they might not have the time and energy to be looking at every single candle. Some people might have cashed out large on the last cycle and want to just, focus on other things a little bit and be more on like cruise control. Other people might be new, young bucks cutting their teeth in crypto and wanting to hustle all the time and get as much like market experience. And, like when I started doing this full time, that was me, that's why I chose Crypto Hustle, because I was just obsessing over everything. I was always in the trenches, no matter what. If there's something happening, I was like right on the front line all the time. And that's great. I see a lot of value in that. It gives you it'll give you like years of experience in a very condensed period of time. It'll make you a better trader, better investor. You'll make mistakes. You'll have winning trades, all that stuff. But the thing is that it's not necessarily sustainable in the long run, because you can burn out if you go too hard, right? It's like if you're doing a marathon or whatever, and you're trying to sprint the entire marathon, and even if you're like a top athlete, like you're gonna get in shape fast, you're gonna get strong and build endurance and all that stuff. But eventually, any athlete, if they push themselves too hard, all the pros, they always end up with injuries, right? If you're a pro hockey player, you're gonna get concussions. Eventually, you're gonna have to scale back a bit. If you're if you're a pro marathon runner or whatever, eventually, you might get shin splints or pull a muscle or whatnot. It comes with the territory, right? And so with anything, if you're an MMA, right, MMA fighters, they'll train really, really hard. I mean, they train harder than a lot of people, and then they go out into the fight and they get injured, and then they have to nurse those injuries, and sometimes they have to recover, and so on and so forth. So that's a good approach if you want to cut your teeth. Or let's say you like, for me, it was like survival, right? I needed to do that because I needed money. I needed a job, right? I need to make money. I need to pay bills and hustle. I knew the markets were low, and I wanted to get my harvest. And I knew that if I really wanted it, I didn't have time to piss around on other things. I cut out all the distractions out of my life and just focus on that. I wasn't sitting around playing video games or watching TV all day. I was just doing that until I hit my goals, right? But there's a cost for that. You know, sometimes other things you have to trade off, like health, or you get burnt out or whatever, right? So that's just different approaches that one can do. And so we'll continue to show all the different ways of cutting the cake as a reminder. And even though we're not as hands-on with all these trade setups and such, it doesn't mean that you can't be hands-on. And in a way, it's almost better, because you're gonna get a lot further in your trading career if you're not spoon-fed every trade, right? It's so much better to be able to, you know, run on your own 2 feet and be independent that way. And we have a lot of OG great traders who have been with us for years who are taking those trades and are in the room, and they're killing it, crushing it. And we have a lot of people in our group, a lot of veterans who did cash out large on the last cycle and such. So you just got to basically crypto. The beautiful thing with crypto is 24/7. And the beautiful thing with crypto investing and trading is you don't need anyone's permission to do it. It's a meritocracy. You don't need a special degree to tell you you're smart. The markets are going to tell you if you're smart or not. The markets are going to reward or punish you based on trial and error and strategies that you employ. And it's up to you how much energy and what kind of strategies you want to apply based on your life. So it's very malleable. That's the beautiful thing about it. All right. So long-winded rant. Let's see what else happened. I know that BNB was, and QTUM. Let me just look at the volume here. Wow, this is actually pretty crazy. 1.8 billion.
Look at the exchanges though. Let's see how much of that is Upbit fake ass volume.
Yeah, that's pretty. Albank. Okay,
Albank.
Okay, I don't even know what the hell Albank is. Okay, so apparently
$1 billion. Wait a minute, hang on. What's their
Apparently Albank's pushing $1 billion.
Wow, Albank.info. Let me look that up.
So what? This is like half of their volume?
Jesus,
just
come
this
on.
coin? This is like half their volume? I don't know. Anybody hear of Albank? We got any Albank hustlers in the house?
They get 250,000 hits a month. I'm calling bullshit, man. Okay, I'm gonna hit up the CoinMarketCap guys.
This is a Chinese exchange, right? They're probably wash trading this.
Oh, for sure. Look at that. Come on, this is stupid. I'm getting annoyed with CoinMarketCap at this point.
Yeah, so cut out Albank. I doubt this is pushing $1 billion in volume.
What's the first one?
Let me go back here. Let me see.
What's the first one we trust?
Upbit.
I use that term so loosely.
I would say Binance.
Binance. So 30 million. I'm looking down. I don't trust BitPump, BitForex.
Yeah.
So they're maybe trading with. God, man, most of these exchanges I don't trust. Like almost all of them now.
Yeah. Well, like we know that Upbit, they got their hand caught in the cookie jar and a little slap on the wrist for wash trading in Korea, so we know people are wash trading. It's so easy for an exchange to fake their volume to try to attract investors and stuff. So the volume's not bad. We know that the volume's not bad because Binance has decent volume. Bitrex got a few million in volume. Obviously, any American exchange isn't going to wash trade because they would get shut down faster than you can stand.
Well, and even Upbit, I mean, didn't they arrested some of their executives for that, and they're still showing stupid. I mean, maybe it's real. I mean, so here's the thing. I would look at this and just say, okay, this is probably trading in the tens of millions, not billions. Like, come on, dude.
Yeah, that would be more reasonable. Tens of millions. Obviously, that's enough liquidity and volume to trade. So it's not. By no means is it a liquid, so that's certainly in the good enough category to keep one's eyes on that.
Yeah,
I think actually ironically too, I think the best performing cryptocurrency of 2018 was Binance Coin in this bear trend was Binance Coin. I don't think anything else perform nearly as well as it did. So, oops, that's a fresh market there. So here's 2018, the start of 2018. It had some dips, but it kept making highs, and then it had a big drop. It doesn't look like much, but obviously, like, crypto's volatile, so a big drop, like 50%, but then it broke out again. Now I sure as hell wouldn't be buying it up here. I personally, it's like my rule of thumb, if I'm going to trade something, if I'm going to invest, if I'm going to trade something, there's three patterns I look for: sideways accumulation, a breakout, or a dip, right? Those are the three things that I will look for depending on the market. What you won't ever see me looking for or buying is just a peak, right? Like the breakout point for this, if you're going to do like an all-time high breakout, was right here, right? This is the all-time high breakout point, right? A really early breakout point, if which is almost like a little hybrid approach, would be on a diagonal line, and you don't always get follow through with that, but sometimes you get an earlier entry, and you could actually have multiples. You could even have this lower range right here if you wanted to try to play it early. One could scale in at different points, including the all-time high breakout. If we were to do like I think we did this last week, we did a fib extension on this, and it was right up into resistance here. So like if you got a resistance at 100% extension after it's made a big move for multiple weeks, it can go up higher, but if it does go up higher, you almost got to wait till the next push and try to get in early, because if you start just chasing peaks after it's made a move, that's like definitely one thing where you can get into a lot of damage. So there's two things where people get in the most trouble in crypto: buying peaks at resistance, or just buying resistance before a breakout, right? Because people like to take profit at resistance, or trying to knife catch a slow bleed, right? You can knife catch a sharp sell-off as a big capitulation wick for a bounce play, but if you try to knife catch and get cute with a slow bleed, chances are it's going to roll over on you. So trying to knife catch a slow bleed, like in a bear channel or something like that, is a lot different than even trying to buy it in a sideways accumulation. Sideways accumulation certainly has risk because it can break support. But in my opinion, once it establishes more of a floor, in my opinion, the risk reward's a little bit better than just trying to knife catch in a bear channel, slow grind. And of course, there's still risk. There's no guarantee that's going to play out. So those are like generally the types of trade setups that I would take for the most part. And I've taken all of those. And sometimes I've had trades where I've combined every single one of those. I've had trades before where I would buy some in accumulation, I'd buy in the break of descending line, I'd add to the early breakout, I'd add to the all-time high breakout, and then as it goes higher, I'd start scaling out, right? So that would be like for a bullish market that's trending. Those are all various different scale-in points that one could do. And then as it scales out, you see it's at resistance right now, I'd probably take some profit. And then if it went to the next extension, I'd take some profit. And then if it breaks all the fib extensions, then you leave a runner. If you don't, then you'll probably be salty, because sometimes it can, I've done that with Stratus where I went all out on the 10X and went up 100X. And then you're in this catch-22 of like, crap, I don't want to buy in higher, but it's taken off, So it's always good. I always find it good to leave a little runner if something's trending, because you never know. Market can certainly surprise you. And if you've already taken all your risk capital off the table, some profit, you don't really have much to lose by keeping a small runner on the table. It's usually just, playing with possible some paper profit there. So gainers and losers, anything interesting here? Okay, so this one, Meta's popped. Oh, Singularity. I do have some of this long term. Singularity.net. Vercoin went up a little bit. So let's look at Meta. Let's look at Singularity. And I like Singularity. Like Chris and I were at a blockchain conference in San Francisco, and we saw we saw a presentation from them, and they have that AI bot, Sophia. Super interesting presentation as far as artificial intelligence, stuff like that. And so I decided to buy some. It was super early and there wasn't a lot of price discovery. I bought some, very small position, became a quote unquote Singularity community member / bag holder because I just bought it out of interest on the fundamentals. Not a huge position though. So it seems like it's kind of moving. And that's an example. There's a perfect example of like, just like randomly buying something that's new in a slow bleed just because it looks cool or whatever. Usually it's better to just kind of wait. Speaking of artificial intelligence, I did meet a guy who worked for Google when I was in Belize last week, worked for Google on artificial intelligence and also used to work for the NSA. And we had some really interesting conversations on artificial intelligence. And he told me that the AI is actually way more advanced than what the public knows, and that they're just going to trickle feed it to the public. But his knowledge was like, I picked his brain apart because it's not every day you get to talk to an ex-NSA / Google guy. So that's some fascinating stuff. He's like semi-retired now. So
Rock, I'm gonna post this. I think I found some news.
Look at this volume here. This is starting to wake up.
Yeah. Right? Look at that link I just put in chat.
This is quite the link. Okay, let me look at this.
I think that was the reason for the pop, maybe.
Dutch Energy. Whoa, that's pretty cool. We will co-create Nature 2.0 enterprise grade AI. Anyways, I have some. I've got a bag. This looks like it's kind of taken off a little bit on some volume. I want to see there's not a lot of USD value, like data here. So I actually want to see what the USD price, because even though it popped, right? Like you see how it was like 50 cents and now it's at 4 cents. I might actually buy some more. I might actually add to my position just because it's fairly low on the USD price and it just kind of popped. And this
can you get the AGI USD on Bitfinex on your charts?
Can't.
There you go.
Okay, here you go. Here's a Bitfinex. There you go.
Yeah, super, super thin. Let me see what the volume is on that specific market. Wait a minute. That's not even listed on CoinMarketCap. What in the world?
So
doesn't make any sense. They've got KuCoin, Etfinex, IDEX.
No, they have it right here. AGI.
No, I know, but go to the markets and I'm looking for the Bitfinex USD.
Oh, yeah.
It's not even listed.
You're right.
So that's strange. What is it showing on your chart for volume today?
It's showing 17 mil. Here there's not much on Bitfinex, but overall it's showing 17 mil, which is actually it's more than that. Right now it seems to almost be.
I'm showing $190,000 worth traded on that.
Oh, wait a minute. 17 mil. Just not too long ago was like $500,000, and
yeah,
a few 100,000. So it's very low and illiquid. It's a lower cap market, right?
Rock, do me a favor on your chart on the AGI USD. What is the chart? What is your volume showing for today on that specific chart?
On this specific chart, it shows 188K.
Okay. So yeah, that's right. So
just on Bitfinex.
Yeah. So that's not a lot. If it were me, and here's what I'm going to do. I'm going to put this on watch. And then if it can break out above 80 cents, like if we can get a few days worth of follow through, or we get a breakout above 80 cents on that, 8 cents.
You're like,
yeah. I'm gonna wait for $8, and then
I'm gonna wait to buy the peak.
yeah. If it just spikes and goes crazy, I'll buy that top. No, if it can break out of that accumulation range. But, that's the thing with like news pops like that is like, especially in bear markets, unfortunately, most of them turn out to be pop and flops. which is why I'm like, okay, I'm just going to sit back and wait.
Yeah, and my position when it first came out was like very modest. Like we're talking like maybe a few $1,000s, like because it was such a small cap, and I just bought it out of interest. But I do think this project is interesting, so I don't mind investing in projects fundamentally that I think are innovative, that might offer something a bit different.
Yeah.
So I'm probably going to scoop up a little bit more, just add to my position, just as an investment, not as a trade, as an investment. It does seem like they're active and doing interesting things. So because the market cap is, I would say, relatively low, what page would this be on? It would be on, page 2, relatively low. It obviously could flop, so I would not put more money than I can afford to lose, of course. That's the golden rule with investing in crypto. Pretty much like everything I have in crypto right now is all what I can afford to lose. I mean, it would absolutely suck if I did lose it, because I do have, I would say, like, a decent chunk of money in crypto as an investment. So it would definitely suck if crypto were to all go to zero and I would lose it all. But I'm not going to go broke, because I pulled money out of the markets. I've diversified. I'm in other things. I got liquid cash. I got fiat in the bank and whatever, right? So you always got to base it on your lifestyle and stuff like that. But this is an interesting project. I might scoop up a little bit more just to wet the whistle, because if it did end up doing something interesting, or if we do end up on a bull trend, if suddenly this gets up into the top 15 coin market cap, the market cap goes into the hundreds of millions or the billions or whatever, then suddenly you've got a really nice chunk of change. And I think this is well below ICO price. So that's also kind of, for an active project, investment wise, that's almost like as far as fundamental is concerned, that's like almost like a secret sauce in crypto, is if you have an active, decent project and it's ridiculously below ICO price, you're certainly doing a lot better than the ICO investors. You're doing a lot better than anybody buying it in 2018. It's almost be like similar to like Travis's approach with stocks, where he tries to find some undervalued stuff, but he looks at a lot more different fundamental metrics. Crypto's fundamental metrics are a little bit not as thorough as the equities market.
And it's the same thought process that I had with T0, right? Like ICO price $10, trading in the 2s and 3s. I see a lot of risk with it, so I'm just going to do a starter position, but I would like to have something at 70-80% discount. So
okay, so this is an interesting thing. So it's down in USD and it's still up in ETH and BTC. So it's not like it's a super steal. Where's the USD price of this ICO? AGI token price. Where the hell? So it's definitely, so token price is 10 cents. So there, people technically, some crypto heads only care about the Ether BTC. So technically, actually, let me just look at on the BTC chart. Technically,
nice, Bill.
It's up a lot from, it's up like 166%. So if I were to buy this, I think on principle, I'd probably wait for this to simmer down and maybe get a little bit of a dip. Unless this just goes nuts. When did this news break out?
I think that was today, wasn't it? Or yesterday?
Oh, shit. Oh, yeah, it was yesterday. Okay. So we might get some follow through on that. Anyways, definitely an uptick in volume. So right now, obviously, the pattern in crypto is people are chasing news events, right? Liquidity is shifting towards anything that looks a little bit hypish and bullish, which actually isn't a terrible sign, because we've had a lot of bullish news all throughout 2018 and even the beginning of 2019. And many markets actually didn't even respond to anything. Like you could say, oh, the World Bank is declaring Bitcoin as the world reserve currency, and, it would do nothing, right? So when you start to see people chasing these bullish news events and starting to see volume coming in, to me, that could be an early sign indication that things are shifting, that liquidity might be shifting back towards a bull's market. So when you start to see an increase in volume, actually, I wonder, I'd like to look at the entire market cap of crypto. I think that would be cool to look at. TradingView has that option, right?
Yeah. It's just, I think total is the ticker. Total 1 or total 2? Hang on. Yeah, just total.
All
and
right.
then total 2 is without Bitcoin.
All right. So let's look at it with Bitcoin. I just want to just to kind of get a pulse to see if it's just one-offs or if there's anything happening in the greater markets. So I'm on regular candles. Let's get it down to something a little bit more manageable. So here's something interesting.
Rocky, if you're trying to get a sense of like altcoins, I would do total 2 because Bitcoin is such a large percentage of that one.
All right, let's look at both of these. So there is something noticeable here just when looking at everything is that it did hit support at a structural area. So there is resistance here, support here, little uptick in volume, some sideways, but we're starting to see a volume increase over the past week or so. So that's interesting. Now let's look at that without Bitcoin to see how that comes into play.
And again, we got to take that volume with a grain of salt, though.
Oh yeah, because of those.
Yeah, I don't know how TradingView is calculating that, but I imagine it's everything that they have listed on their platform. But either way, I do believe there is an uptick in volume. I just don't know if I can trust those candles or those volume bars.
Yeah, so if we do break out of this range with altcoins, that to me, would be possibly a strong signal, maybe even a confirmation that this was accumulation. And if we could break out of this on volume, and if we start to produce some higher lows, and suddenly there's a definition of bull trend right there. And just like what Chris is pointing out before, like if it came up into this resistance and then it had a pullback, and then you get this large inverse head and shoulders, this lower accumulation, because this really did bleed out a lot. People have really been punished. Fundamentals of crypto are still bullish. It ain't going anywhere. Banks are getting in, there's a lot of interest there, but it really comes down to dynamic of supply and demand and user adoption. And basically the crypto markets have been stale, a lot of bag holders, a lot of people got battered against the rocks. We need fresh blood. Fresh blood is fresh money. It's not just going to go straight up parabolic in one shot. It obviously takes a while to recover. But you can see, like, structurally, if it did break out of here with the sideways here, then that would actually be probably the first time in this bear trend where we actually broke out of resistance to make a higher high, right? So we had some like resistance in through here. We had some resistance in through here. And then it just kept on making new lows. So if we could we haven't even broken out of a range there, but if we can break out of a range, then to me it was, especially if this volume consistently persists or even gets bigger, then to me that's like a early sign of the market shifting back towards the bulls, obviously with no guarantees, but on a technical play, and in my opinion, the technicals do tend to hold more weight in crypto than the fundamentals right now because of all the vaporware out there. Whereas like in stocks, technicals are important, but there's a lot more weight on the fundamentals because you're dealing with real world products and services and global macroeconomics around debt cycles and government regulations, all that kind of stuff. Like, Boeing's crashing today because of the past few days because of those Boeing 737s that crashed and having to, I'm on the airplane yesterday and hear that news, right?
Hey, Rock, RK posted a chart in chat showing a trend line. And I agree with that, Rock. That's a pretty important trend line. So, obviously price has been squeezing and we've been consolidating in this range for a while.
Yeah, so this is 2015 style, right? And
yeah.
Yeah, and this is the current exactly, right? You kind of see like a very, very similar fractal. This is a beautiful thing about crypto is that because there's so much around supply and demand and market sentiment, and because it's so permissionless and it hasn't reached market saturation yet, market cycles are just so, I mean, the fractals are just so beautiful,
Yeah.
I don't know if I've ever seen other markets that played out so perfectly. Like sometimes you'll see other markets, like an equities market that plays a fractal like this, but then it never has another market cycle or just spends years just doing nothing,
Yep.
So with crypto, it's like the cycles tend to be very fast because we haven't reached market saturation. There's always new people taking an interest and learning about crypto, right? So it's whenever the buyers take over, then that's you're in a bull market and history. So yeah, this is very, very good analysis here, very good comparison. But as you can see, when we hit the breakout point here, it's not like it just boom went straight up, right? There was a lot more of a sideways grind. So even with Bitcoin, like we could still do another we could go sideways for all of 2019 for this pattern to still play out, which is why I'm not in a rush, which is why I'm kind of playing the long game, because also, well, the taxes have kind of impacted my strategy a lot too. But in the long game, if you really, really want to play like just a one swing grand slam home run, buy an accumulation and sell on the parabola. Sounds it's easier said than done, but ultimately we've seen it time and time again. When Bitcoin's trending all along the bull trend, it was interesting. What's interesting about 2017? All throughout 2017, every single time we hit a fib extension resistance point and I would take profit, like when we hit the 5K area, I'd take profit, buy a dip. We hit the 7K area, I'd take profit, buy a dip, so on and so forth. All along, we hit the 3K area, take profit, buy a dip. All throughout that area, every time we hit resistance, I always entertained the possibility that it could top out, right? I never just assumed that it was just going to continue. But as a result, it actually meant that I was able to trade all the waves throughout 2017. But, and I was always kind of 50-50. It's like, yeah, this could be a top, good to entertain that as a possibility. But what was interesting is like when the markets actually went parabolic, like when we broke through 10K and just blasted to 20K, it was so, to me, it just felt so absolutely ridiculously obviously that the market was parabolic and that the probability of that lasting was just so, you still got to entertain it. That could go higher when you're in a parabola. Maybe it goes to 50 or 30, but like, it's just screaming like this cycle's over, like batten down the hatches, hurricane shitstorms coming. Like if you're not, and so it's weird. And everyone who's with us now, if you make it to the next cycle, and if we do have another massive parabola like that, you'll probably have the same feeling where it'll feel like a 90% probability where that shit's just, it's almost like when you've been through it. And the only reason why I was able to feel that so strongly is because I lived through 2013 and 14 and I went through the experience. And if you have an experience, you could look at it on a chart, but your emotions can still get the best of you, right? Your mind can still tell you this time is different. That's why we always laugh at this time is different. Same thing goes with the bear trend. Crypto's dead. It's never going to recover. Yeah, this time is different, quote unquote. Or shit, it's parabolic, but the bankers are coming. They're going to buy our coins and Wall Street's going to pump our bags to 100K and we're going to draw parabolas into the sky and I'm going to be your spirit guide into the ethers and all this crap, right? This time is different. And usually it's not different. S-curve, I remember that. No, we're not going to hit a bear trend. It's a revolution, S-curves, user adoption, all this stuff. And all that stuff is true. S-curves and user adoption, Wall Street coming in is true. But does Wall Street coming in mean that they pumped our bags, or does it mean that they're going to continuously dump on everyone until until prices are good to accumulate, right? I mean, people aren't stupid, right? They don't end up managing multi-billion-dollar hedge funds if they're stupid and with the dumb money, right? They've got deep pockets. They can play around. Anyways, I digress. So let's look at some news. I think we've gone an hour just talking about the markets and such. So let's so we looked at that AGI news, and some of them are stupid. Just because someone's managing a lot of money doesn't mean they're smart either. I actually personally know whales that got wrecked, like big whales that got wrecked from the bear trend. Like, just because someone has a lot of money, like I know one cat who's a market maker who had over $100 million worth of crypto, and the bear trend impacted him, and he got kind of wrecked. And I know a lot of people who had tens of millions in crypto that got wrecked. So a lot of people made a lot of money as early adopters, but it didn't mean that they had the trading acumen or the ability to manage their emotions or see the writing on the wall and take profit and not lose 90% of it. So just because you're a whale doesn't mean you're smart, right? Just because a whale pumps a market or whatever doesn't mean they're smart, right? There's a lot of dumb whales out there too, right? So it doesn't mean anything. But what it does mean is that they have a capacity to make a bigger splash in the market, and they have a lot more firepower to influence the market than other people, right?
Hey, Rock, I've actually got to take off a little early today, but just wanted to say, see you guys in the chat. The one piece of news that I was looking at was Mark Faber, who's a pretty famous investor, just started buying Bitcoin for the first time. So that was actually pretty interesting. As a lot of these like old school guys start to see the light, that's a good sign for the next cycle. So yeah, that's great. I love seeing that, especially the ones, if they trolled before and then they do see the light, then yep.
It's good. It's good because they have influence. They've got money. They've got influence. They've got their own social circles that have money. It spreads. That's how it spreads. People talk to their comrades, their people. They start getting other people. Everyone who encounters me, I light a fire under their ass, and they start to get interested in crypto. Anyone who encounters me in real life, whether it's complete strangers or whatever, like I'm constantly planting seeds in people's minds, right? So this is how it spreads. It's all user adoption, supply and demand. Simple as that.
All right, guys. Thanks, Rock. I'll see you guys in the chat.
Sounds good, Chris. Take care. All right. So so this is interesting. 73-year-old investor Mark Faber. I haven't read this article. Makes first ever Bitcoin purchase. Oh, another thing. What's his name? Jack Dorsey, founder, CEO of Twitter. He recently posted his thanks Trezor, showed his Trezor wallet. That shows he's certainly getting a little bit more interested in crypto, taking a little bit more serious. When you start to see billionaires of tech startups and stuff coming out and showing their interest and their enthusiasm in crypto, in some ways that does kind of mean that Bitcoin is an accumulation because someone's accumulating it. Does that guarantee that it's not going to drop lower? No, it doesn't guarantee that, but it does show that big money is accumulating crypto. And again, that's the supply and demand dynamics. And yeah, he's a Lightning Network investor, and I think what was his app, Cash App or something like that he's invested in as well. That's doing Bitcoin. So this is good, right? The old guard getting into new technology. Certainly a good sign. We're just seeing a lot more of this. We're seeing more and more of this. Every week we're starting to see more of this. And the beautiful thing is, regardless of whether we're not at a bottom, to me doesn't matter. As an investment, I don't give a crap about whether or not we're at a bottom right now, because I look at the overall market cap, right? Has this reached market saturation? You know, we almost pushed $1 trillion. So based on just what we had before, crypto as an asset class, just what we had before, I think we're at like 800 billion. We're a lot lower. Someone's saying Cash App is the #1 Cash App. So there you go. That's like user adoption on ramps right there. So like we know we're at the lower end of the spectrum when we're at 800 billion. So obviously the risk reward's a lot better, buy low, sell high, right? But if you look at crypto as an asset class as a whole, I mean, is it not worthy of at least $1 trillion market cap or higher, right? Is it not innovative enough for $1 trillion market cap or higher? Will it have enough importance in the overall global economy that will warrant it having a $1 trillion market cap or higher? Well, you know, companies like Google and Apple, or was it Apple and Amazon hit $1 trillion market cap not too long ago? Just a company, one bloody company hit $1 trillion market cap, right? And that wasn't, and they've been around for decades. So it shows that with tech and innovation in the tech space, there's a lot of growth potential there. And with cryptocurrencies, you're not just dealing with tech, you're also dealing with finance. So it's like the merger of the two most profitable industries in the world. Two industries where you can get rich the easiest in the world is finance and tech. You combine those two together and you just pumped a bunch of steroids into that dynamic. And I know it because a lot of people get rich on crypto. So it happens every cycle. Not everyone gets to keep it, but a lot of people make money in crypto if they play their cards right. So I personally think that crypto as a whole will probably hit, I would say, like maybe a $5 trillion market cap if it continues on its current trajectory in the next 5 years. That's my guesstimation. So we'll see. Obviously, I'm biased because I love crypto, and I've done well in it. But you know, I haven't seen any evidence that this industry is dying. I just see continuous growth. You know, there are some growing pains. It's not to say there aren't any growing pains, but I think another news event that I heard was that the Central Bank of Mexico recently came out and said that only financial institutions will be allowed to use crypto, and they don't want retail using it, which is complete garbage. I mean, you know, that it's almost like the antithesis and the opposite of what crypto is for, permissionless money. And the irony is it's permissionless money. So technically, you know, they don't need the Central Bank of Mexico's permission to tell them whether or not they can get crypto or not. It can certainly make it a lot more difficult for people in Mexico if you can't easily buy crypto on exchanges. But that hasn't stopped people in Venezuela, right? The government in Venezuela wasn't exactly all happy about people mining and doing crypto or whatever, and that didn't stop them because, you know, their government with hyperinflation has completely eroded their power and purchasing power and has failed the people. So what do they care? It's survival at that point, right? When you're in a situation like that, it's survival. So crypto means different things to different people. All right, so that's one news event. Let's see. I didn't get that. I was very conservative, so probably give him more. Anyways, crypto community eyes Tether after website dilutes USD backing claims. Yeah, so this is interesting. So basically they're saying that with this, they're saying that, oh, it's backed 1-to-1 by fiat, and now in their terms and conditions are saying, oh, it's backed 1-to-1 with fiat and possibly other assets. Well, now you start to get dicey because now, like, what's another asset, right? Can they specify? Is it fiat and gold? Is it fiat and a pile of shit coins that they just printed for themselves, or a bunch of ICO tokens that might not have market liquidity? Is it fiat and some website that they own that has a market value but isn't liquid until they sell? Like, what assets exactly is it backed by, right? So that would be interesting. I don't have any Tether right now. For me, the risk to reward in owning Tether is pretty crappy because I had a lot of Tether when we were parabolic, and my hand was forced to hedge But now with prices lower, I don't mind being a crypto maximalist again. I don't mind holding my own private keys and weathering the storms because price is low enough for me that I'm comfortable with the ride. I know at this point it's probably just a matter of patience. Time will tell. Nothing's guaranteed, but that's, you know, I feel pretty good about crypto as a whole. Even if it drops lower, I feel pretty good about it. So, and any other news? Anything that anybody can think of news-wise? Seems like it's been a quiet week. Usually on social media, a lot of the news is just people on Twitter, deciding to gang up on their 5 minutes of hate for the week. They find someone that they don't like or whatever. Someone trolls. The worst thing you can do on Twitter, if you're not in the crypto space, is troll crypto people. So you end up with this angry lynch mob of, I usually don't participate in them unless the people are like outright scammers, but it's funny to watch. It's like popcorn time, you know. So usually people get too bored with the markets and they start fighting on Twitter. Any other news that really stands out for people this week? If not, we can wrap up. I think that's the only things that really popped out for me this week. So certainly, I think now is definitely a time to pay attention. Things do look very interesting. I am invested. I'm probably going to take some of my BTC. I don't have any fiat on exchanges anymore. I basically either put all my fiat into crypto or withdrew it after the Quadriga incident. Actually, I got to tune in to see what's up with that. I have been a little bit out of loop on that lately, but I've almost kind of written it off. I have written it off as a loss in my mind. So if I get some money back, it'll be a pleasant surprise. I'd rather be pleasantly surprised than disappointed. So obviously to manage risk, I had to pull all my money off exchanges and stuff, and some of it went back into the bank. And if we did get new lows, I'd probably deploy some fresh capital from the bank and buy some fresh crypto. It'll be a little bit of a slower process. I'll use Kraken. Kraken's now my go-to exchange for on-ramping in and out of fiat, just because it only took 4 days to cash out some fiat, so that was pretty good. I was satisfied, and I also like the founder and CEO, Jesse Powell. I think his values align with mine, and he seems like an OG crypto head who has a good philosophy in the space, right? So, but doesn't mean that they can't get hacked or lose money. So you still can't treat it like a bank until crypto exchanges are fully insured. Then that might differ. Aside from that, just seems like some random coins popping off, and I think we'll just end it there this week. If I do end up I do want to add some more stuff to my longer term bags. That is going to be my goal this week, just to diversify a little bit more. I did consolidate and go fairly heavy in Zcash and Tezos. So I'm probably going to take a sprinkle of some other stuff longer term. So I might add to my AGI position. GNT is always something that, I'm going to post that in the alert channel. GNT, Poly, those things interest me as well. So I'll keep people posted on that. I did do a bunch of tax harvesting and then consolidated into my favorite projects. But I think it's time that I sprinkle and diversify a little bit more into some other stuff that I also think are solid enough projects. But I'm pretty much like holding until really parabolic moves. Like I got to see, for me to want to create a new taxable event, which is a real pain in the butt for me. I need to see at least a 10x return on crypto. And that sounds greedy, but I have patience. And if it doesn't happen, then so be it. But I have patience. So I need to see at least 10x returns on anything that I buy investment-wise, because I'm not actively trading as much for now. That might change, right? We go back into a bull season and stuff. I might get back into the hustle and grind and trade a lot more. So, You know, that's why I say I'm like semi-retired. It's one of those situations where you think just when you're out, they pull me back in, you know, type of thing. So I wouldn't be surprised if things start to get cooking again. That it's like being a cat, you know, you see a mouse run by you, you can't help but chase it, right? It's just instinct. If you're a trader, you're a hustler, you see some action, you see markets run by you, as much as I want to live the good life and just, you know, relax a bit or whatever, I think it's in my nature to hustle. And I think I would have a very difficult time watching things pop off and not getting in the trenches. So I say as I'm semi-retired, I'll probably come back into the trenches when things cook up a bit. For now, in accumulation, it's a good time to just focus on other things and not have to hustle so hard and stuff. It's ebbs and flows, right? I had crazy burnout at the end of 2017. December, I was cooked. It was just like a crazy year of nonstop, and I needed a cool down from that, right? And then the slow grind in the last quarters of 2018 was just kind of slightly aggravating markets. So slight tilt too on some of my investments. So I just had to take a step back, cool off, let the market simmer a bit, recharge the batteries until it's time to get back into the grind, back into hustle. But I don't think I'm going to grind it as hard as I did, because I don't really need to. But I do have goals. My goals are to make 10 to 100 times more than what I made on the last cycle. It's very, very ambitious. I want to see a minimum of 10x returns on my entire portfolio and my entire net worth from what I made on the last cycle. So that's my goal for this next cycle. I figure if I could start with nothing and do fairly well in the last cycle, then if I'm starting from a good sizable position, I'm pretty sure I could probably 10x my net worth on the next cycle and do a lot better. So that's my own personal goals. It's good to have your own personal goals, and also not only just set good personal goals for yourself, but have prizes for yourself at the end of the road, right? You know, like a beach house on Grand Cayman or something. You know, there's always a nice little prize at the end of the road if you do well. One can dream. All right, folks. So take care. Have a great weekend. Try not to do anything too crazy. And let's see what the week brings us, if we get a little bit more action. And if I do end up buying some more coins to diversify this week, then I will keep everyone posted and let you know. And I'll give you when I do that, I'll do a fresh updated list of my positions and so on and so forth, and relative value to my crypto portfolio. So take care, folks. Have fun and happy trading. Cheers.